Recording in progress.
Start my.
Yeah.
I always forget. I did that this morning because, I set it to auto record, but then, when I first come on, I don't be talking about nothing. So,
I got you.
um, but no, I, we went into the Daily Bread this morning, and then, and I wanted to do it. I tried to even do it by myself, like, on Friday. And, so I left both sides open, but it went into profit on both sides right away. I'm like, dang it. So I'm like, okay, well, it wasn't meant to show them yet. It wasn't meant to show them yet. That's what my cousin was telling me. It ain't meant to show them yet. So I'm like, okay. So today it started into one side, and then it, wicked one of them, it did take profit on one of the trades. It was almost in profit on the other two. And then it wicked up really quickly, and it went to like $1,000 between the two, because it was two leftover trades. $1,000 between the two leftover trades. And then so it went all the way up, played around a little bit. And, I know that's a place where people would get nervous, like, oh my gosh, I'm $1,000. What's going on? And I'm like, no, this is perfect timing for me to teach you guys how the hedge works. And so, I just gave an overview of it. It's a lot of rules that go with it or whatever, but that's taught in the other class. But I just wanted them to see, and it was like a perfect example. And then it was up there, and I'm like, I know it's going to come down because of this and this and this, and showing them how, by waiting to see, waiting to market structure tells you that it's time to make another trade, then you don't do it. And so boom, I made the other trade, made a little money on that, and then it was playing around, so I closed that out, and then it went back into profit. And I'm like, that's how the hedge works. Like, literally, it's your hedge of protection, so you don't have to trade in fear. And it's the mindset that really gets us. It's that mindset. And so just really, really becoming clear on that. It showed a clear, you know, clear, path with the hedge trade. So it was kind of cool. It was kind of cool. I was happy about that. I was like,
Uh,
yes, because I really wanted you guys to see it, because I talk about it, and I can explain it, but it's different to see it, actually see it in action, and to see, you being $1,000 in loss and end up, hitting your profit or whatever, or even just coming out of that loss. Because I know that's one of the biggest fears that people have in trading. So, Howard, was you on this morning? Did you see the trade? Is he muted?
you're probably trying to figure out how to turn this. That's what he's
leave,
doing now.
leave
That's why he
Howard
grabbed
alone.
his telephone. But
I
he's looking around. You can't hear me? You can't
can
hear me?
hear
That's
you.
what he's saying right now.
I can
You
hear
can't
you.
hear me?
Oh, that's
No,
not
that's
him.
me.
Oh,
No, that's not him. That's me.
he looked like that's what he's saying too.
Exactly. I know what he's saying right now. You can't hear me? Can you hear me now? You can't hear me? What did I do? What did I press? That's how right now.
That is too funny. You guys are too funny. Oh my gosh, you guys are funny. Y'all are funny. OMG. Oh, he's saying all of that. All right, what do you guys want me
Yep.
to do today? Hi, Robert. Got you, Vaughn. All right, this is the advanced class. This is the intermediate advanced class. So, I let you guys kind of dictate what you guys, both classes actually, what you guys want to see. I have some things that I might have planned, but um, is there anything that is standing out for you guys? Anything that we've done in this past week that you guys want to see, how I'm able to maybe, I don't know, use the fibs, use the what is it called? The Quantum FX Pro. Anything you guys to help with you, anything you want to know particular, because everybody's at different education levels. So it's not like I'm coming in with a structured course that has a whole curriculum. So I'm open to teach whatever you guys want to know about besides my, my indicator. I'm going to, of course, teach on that. No,
I'm going to be a fly on the wall.
you're going to be a fly on the wall. Okay. All right.
Of course, I've dabbled with the on which indicator, and I've been using it. I just wanted to get some clarity with it.
Okay.
I'm good, but by the same token, I wanna actually see you do it.
You want to see me do it? Okay. Well,
Yes.
I work with them in the video. So, okay. So I work with them in the videos just so you know, if you go to the Kingdom Exchange, YouTube Kingdom Exchange with an X, um, we have a list of videos under the playlist. And they're starting to build up because they're on the 30-day challenge. And so you'll see me using the tool. Also, make sure that you are looking in the hub. I really want you guys to, where is it? To pay attention to, it should be here. It was, oh, here. To the hub. If you go to the here and you click on this link, it's gonna give you the Google Doc as a Google Doc that's the indicator guide. And so it lets you know exactly what each thing does, how to enable, these are all the settings. It goes through the settings first. Oh, I'm not sharing my screen, am I? Let me just, sorry about that. Let me share my screen because I'm just going through this like you guys can see what I'm talking about. All right. So here we go. All right. So if you go on, let me go back to where I was at. So if you go on the KXC Hub and you go to Kingdom Currency Exchange, that group, you'll see here is all our tools and resources. The first three are our guides to our trade, indicators, trade managers. And then the next one is the actual compound log that's downloadable to create your own. The rest are links to the different classes or, YouTube, our trading platform, Trading View, our trading platform, and then the classes each week or each day, should I say. So this is an easy way. If you go log in here, this kind of will give you access to everything that you'll need if you're ever, trying to get to a class, trying to find something. This is an easy way to get to it. So if you go to the Quantum FX Pro and you want to learn more about it, the guide is here. It's a Google Doc. You can download it, but it lets you know, like, first the settings, gives you how to log on, how to find it, gives you all the settings to it, and what the settings mean. And then it'll go to what, explaining what each thing does, like what price, the price action trend lines are, what the trend channel does, what it represents. It's not going to give you, it's not meant to be a educational book where it's teaching you about trend lines or anything. It's just telling you what type of trend line it is and what is used, to, like, for instance, the confluence pillars table is used to confirm, signals. It's used for multi-time frame analysis, and it'll give you a little blurb on it, but it's not going to teach you it. It teaches you how to set up the settings as well. I mean, the alerts, I'm sorry. And then it does give you some information about using each of the guides. Like, for instance, you can use the SR levels for trading by identifying key levels. So it's going to tell you, pay attention to the ultimate support and resistance lines for strong support and resistance. It's going to tell you to watch for the potential reversal zones, because this is what it does around this time. It also tells you, how you can use it to exit trades, how you can use it to enter trades. It's just going to say, like, consider entering a long position when the price bounces off the lower significant levels. It's going to tell you, a little bit of how you could use each of these things to incorporate into your trading plan. Again, its purpose is not to teach you to trade, but to assist you in your trading. That's what it is. So yeah, so all of that, is there. So I really encourage you guys to look at that pro indicator guide. If anything stands out for you, because the reason there are so many different things inside of that, the reason I created it with so many different things inside of it is because everybody, you know, something is going to stand out for everybody. You know, somebody might like the price action trend lines, somebody might like the trend cloud, somebody might like the you know, everything is going to be different. And so I call it my little Swiss Army knife. And it, you know, it's because I'm a little lazy. I said I'm going to make something so I don't have to keep drawing all these boxes and stuff. Because when I first started learning, I had to draw boxes and lines, and I'm like, yeah, I'm not doing all that. That's a lot. That's a lot. I'm not drawing all these boxes and lines and stuff. So I'm a fine. And that's what I did. I found something to prevent me from having to draw all these boxes and lines to see where stuff was. You know, of course, now I've gotten to the point that I can eye some things. But again, having that, you know, that easy, I can just click through and see this is a resistance, you know, and oh, it must have already broke through support because I don't see a support here. So, okay, I know that either it's going to create a new support and go back up, or it's going to continue down until it finds support. I know that just without nothing else, nothing else. I have to look at the screen and say, I already know that because it's programmed into the indicator to tell me, you know, that it already is going to draw my support and resistance lines. So if it hasn't drawn a support line, there is no support. So it's going to keep seeking support. That's just automatic. Things like that. And so that's how you use the tool, because the purpose of, for me, the purpose of trading is the freedom that it's supposed to bring, the freedom to do your purpose. And of course, to fund it, you know. So that's how I look at trading for me. And that's how I incorporate it into my life. So with that being said, any questions before I get into the tool? Just a moment, you guys. I got this. Just a moment.
Hello, can you hear me? Hello.
Yeah, we hear you. We hear you, bro.
Finally, good gracious, gracious. All right, how you doing? All right. Question.
She said, "Hold on." She said,
Yes,
"Hold on."
I'm good. I'm good. I'm back. I'm back.
Oh,
I'm
all
back.
right. All right.
Okay,
Thank you, Jay.
I finally got in. I finally got
Jay
in.
said that's what you. Wow.
Yeah, I
Good
know.
morning, Howard.
Yeah,
All right.
that's how.
Um, what I did was, well, one of my accounts got messed up. My
Okay,
uh
that's okay.
account, but that's okay. My
You know, you
grandson
can
messed it
just,
up.
if you want to do the account again. So there's two ways. If you're referring to the Apex account, what you can do, there's two things. So I don't know what date you started the account. So, but you have 30 days basically before you have to pay the monthly fee, whatever. It's like $40, 30, 40, I don't remember, $40, $50, something like that. But if you feel like you can pass the challenge, like say for instance, you bought it on September the 1st. Say you bought it on September the 1st. So that means you have 30 days. So you have to October the 1st to pass the challenge, right? So say you just said you messed up on the challenge, you violated the rules, so you got kicked out, whatever. So now you have to either buy a new challenge or you can reset the old challenge. You have two choices. The reset is going to be based on whatever the price is for resets going now. So I think resets are $35.
Okay.
Okay. So
That's
if
correct. Yeah, it is $35.
okay. There you
Okay.
go. So if resets are $35 and it's going to cost you $50 to buy a new one, if you feel
Reset.
like you can accomplish you can pass the challenge in the whatever amount of days you have left in the month, it's better, you know, you'll save yourself 15, say it's $50. You'll save yourself $15 by buying the reset versus buying a new count. So before I just wanted to make that clear to you.
Got
First.
it.
Now go ahead. Sorry.
Okay, I've done that. So yes, I'm totally clear on all that. I've done
Okay.
that. My grandson messed up the account, but that's okay.
Don't worry about
I
it. It's okay.
I bought two more.
Okay.
Now I tried to bundle them. I
Okay.
couldn't bundle them, so now one has $307,000, and the other one hasn't been started yet. So my question
Okay.
is, how do I bundle these things?
I'm going to show you right now. That's the
Should I
point.
put mine up or no?
No, no, no. I'm gonna show you in my account, and then you follow along with what I'm doing
Okay, I'm following
in
you.
your account. Okay.
All right.
So you're gonna go to Trade of 8.
I'm in Trade of 8 right now.
Okay.
You're not sharing.
Oh, thank you, because yeah, I'm logging in, but I'm about to share right now. Okay, let me go here. Thank you, because I be
Now,
forgetting.
I have 2 accounts. Do I need
I
more than 2 accounts to bundle them, or?
Yeah, if you're bundling it, you're bundling 2, right?
Yeah,
That's
so I
that's
just want
what
to
you
know, does it have to be like 5 or more, or for the 2 is good?
nah,
Okay. Okay,
nah,
got
you
it.
only need 2 accounts. Oh, you saying because I be bundling 5 accounts?
Yeah. So,
Yeah.
so now my next question
It's
is, one is at 307, the other one hasn't been started yet. Is that going to be a problem also?
you're gonna pass one challenge before the other. That's all.
Okay, got it.
Yep. Nope, not gonna be a problem. So it's gonna start from wherever you at. Oh, look at that takeoff. Anyway, all right. So see here where I have these are my these are
Okay,
I've passed my accounts, right? So that's why
okay,
mine look a little different. The PA in front of them. All right.
got it.
So all right. So matter of fact, I'm gonna do it because I gotta bundle my accounts anyway. So if you look here, I have this one called Royalty 2. And you'll see that in Royalty 2, there's these 1, 2, 3, 4, 5 accounts, 32 through 36. Those 5 accounts are in that group. So, and then these are additional accounts that I could add to this group or not, right?
Okay, how did you
So
make that group?
I'm about to show you right now. So if you go to where your accounts are and you click the drop down,
Did that.
you go to
Accounts are there.
manage groups.
Yeah, manage groups.
Now you're going to click this little plus button
Okay,
and you're going to create a name for the group. I'm going to create my group because I need one
okay,
for my other ones. I'm going to create my group, right? And click OK. Now that you've created the
okay.
group,
Click
you'll see the
OK.
group name here. So I have 2 groups, so I have 2. But I want to add accounts to this group, right? So I was 32, 3, 4, 5, 36. So I want to add 37. You just slide them over, 38,
Okay, I got it.
39, 40, and 41. I trade in groups of 5. These are in my other group. These are in this one. Once I do
Wait,
that,
wait.
I'm going to
It's not.
click save.
It
And
didn't
then
happen for
that's
me.
close out. You sure? And then you'll see them here. So I'm going to go through this
Okay,
again. So you
I
go to manage groups,
I did that. I
click
made
the
them
plus
into
button
9.
to create your group. You got to name it
Did
something,
that. Yes.
right? Okay, so when you name it something, it's
Okay.
going to go to this screen, this right
Oh,
here,
there it
this.
is. Got it.
All right.
There we
So
go.
when you need to be, if you have multiple groups, you need to make sure you're on the group that you want to add accounts to.
Got it.
So you on there, and then you'll see it'll have these. You go to where this, you see that little blue thing that
Did it.
came up? When it does
Did it.
that, it's ready to move over, and you just move it over.
Got it. So
And
I'm
then
done.
after you've moved over everything, you click
Just say.
save. But this is the catch. Now, let me just explain this because this is going to help to answer Jay's question as well. So Jay, for your account that has, like you have an account with different values. So for instance, you have a $300,000 account and a $50,000 account, but you want to trade them both together. As long as they both are on Tradeovate, you can trade them both together. So you would put both of them here. But what you would want to say is, this is where you can change the quantities. So you can say, for the $50,000 account, I want to trade 1 contract. But for the $300,000 account, for every 1 contract in the 50,000, I want to trade 3 contracts in the 300,000. So you would do, say this was the 50,000 and this was the 300,000. You would say, I want to trade 1 in the 50,000 and I want to trade 3 up, right? Go up. It's 3 in this account, right? So that's how you would get to your, like, you would get to the same goal, because 1 contract in comparison to the $50,000 amount you need to make versus is the same when you do the math. I'm not saying it's 3. We would do the math. Whatever that math is, it would be the same. So like, for instance, say your standard account, the standard amount that you want to trade is 10 contracts in your $300,000 account and 10 contracts in your $300,000 account. And what is it? I don't know how many contracts you're allowed in the 50, but just say 2 contracts in that. So every time you trade, when you click, say we do that. So that would be, you would put a 2 in there and you would put a 10 in here. So every time, if that's your normal, right? I'm not going to save that. So that adds up to 12, right? So that adds up to 12 contracts. So you would have to trade in multiples of 12 when you go here and you put this in. So you guys notice that when I put in my number, I put in 50 because I'm trading 10 contracts and I have 5 in my group. So 10 times 5. But if you have different numbers, like in the example I gave you, you had 2 and 10, you would just put in multiples of 12. And it's gonna attribute 2 to your $50,000 account when you trade and 10 to your $300,000 account when you trade.
I understand. I
Got
guess
it? Okay.
the first time you said that, you kind of threw me off, but
Okay.
I
You got it now?
Yeah, I understand now. So basically, so if I wanted to trade double the contracts, it would basically be 24.
Right. There you go.
So I'd be trading 20 in my 20 in my what is it,
300.
in the 300, and
4.
4
4.
inside the 50.
50. Exactly.
All right, 10-4. I got you. All right, appreciate that. Thank you so much.
No problem. I just wanted to make sure you knew that. And so now this is the next thing. The last of this part is when you are trading, if you want to trade your group, you have to, this has to be checked on whatever group you're trading. If it's not, so see, if I check it, see that comes underneath here. So that's how I know that I'm trading this group. Now, in order to trade that group, you have to make sure that whatever group, whatever one of the, it just has to be one that you have clicked on, one of the accounts that is a part of that group, right? So you have to be on one of the accounts that is inside of that group, and you have to have that group there. At that point, you can then trade that group, and you have to trade it. It has to be in even multiples across. So like if you have, 1 and 1, you have to trade in 2s basically. So 2, 4, 6, 8, 10, 12. If you have, have it, like he said, if you had 12, you have to trade in 12, 24, 36, 48, like that. So whatever multiple you have to trade, when you put that number here, you have to put that number there. So I hope that's clear for everybody for Tradeovate.
Okay, so just to make it totally clear for me, if let's say I got 10 contracts, both that'll be 20.
Exactly. So you would put 20.
Let's say
if you have 2 accounts and you want to trade 10 in each account, you would put in 20.
Okay, and if I want to raise that because the trade is going good, then I have to put in, say I want to raise it to 15. Can I go 30 and would it automatically?
15. Oh, you would have to. So if you already have 20 in, you would add 10 because you already have 20 in.
Okay, I see what you're saying. Okay.
Because you have 20 running already. So you
and then
add
10.
So
Got it.
Yeah. Because if you tried to add 20, it's not going to let you because the max you can add is 35 in that account. In that account. And it has to be evenly, so it'll reject the order.
Got it.
Got it?
Got it.
Okay.
Yes, ma'am. Thank you.
Everybody, okay, Jay, your hand is raised. Yes.
All right, so I I don't know if my research is right, but I don't know if anybody else done already had this before. But the account, like if you don't pass the because I was told two different information. Like, if you don't pass the, like, say if you still had the evaluation account going, and you're not, and you didn't fail the evaluation account, and when the monthly came, um, uh, they someone told me that you will not be charged that monthly as long as you are still trying to pass the evaluation.
Okay.
And
I
then
don't,
someone
I don't,
else
I don't,
told me,
I don't know that.
yeah, yeah, like it's like I'm trying to see because I'm trying to get another account, but I'm close to that part or that end of that part where they're going to
Reach
recharge.
out to support. Reach out to support.
Yeah, that's the
So
thing. Like support gave me two different. They gave me two different. That's what I'm saying.
okay,
Support
so
gave me
what
two
you do,
different things.
what you do is, I'm gonna tell you, use the favorable one. The one that favors the situation that you want to be in. If you got two, so if support told you, they have to stand by it.
Okay.
So when you said you heard it from somebody, I thought you were speaking about somebody else outside of support.
Nah.
So
Support
if
like
support told you they're not going to charge you, then that's when you send them back the email and say, hey, y'all charged me and y'all said y'all wasn't going to charge me.
okay. All right. Because I try
You
to
understand?
also find it and frequently ask questions, and they don't say anything about that and frequently ask questions. It's just that I'm not trying to like my monthly resets on the 30th on the 13th of this month, and my one of my accounts I lost, and I was trying to get that account back, but I'm not trying to pay for it now. And in like 4 to 3 days, they end up charging me again for it. You know what I'm saying? So I
Right.
was
So
trying to
is
see.
it a big difference in the amount?
Yeah,
Uh,
32. It's like 35, and I think if I wait, it's it might be like if I press the reset button, it's only 35. But if I don't press the reset button, it's 55. So
okay. But
but if I press
remember,
the
if you press
reset
the
button,
reset, you gotta pass it in 3 days.
yeah, exactly. So
So you got to think about
yeah,
that
it's
too. Do you want that
yeah.
pressure on you?
I mean, that's not really like. I mean,
Because
I work
I
better.
can tell you for sure, if you press the reset button and the and you press the reset button and the invoice. So if you reset and you don't pass, so what I understand is if you press reset and you don't pass by the 30 days, that you will be charged for the next monthly fee. That's my understanding of it. Is the monthly
Okay.
fee is the monthly fee. That's why I was telling Howard, if he has enough time to pass before that monthly reset, that monthly charge. So it doesn't matter if you're active or not actively trained, attempting to pass that evaluation. My understanding is if you don't pass by the time that your monthly fee is to be billed, that they will bill you the monthly fee. It doesn't matter. That's my understanding. So I never get that close. I don't get that close. I don't. Yeah, I be trying to
Yeah.
pass 1, 2, 3 days. And that's not a good thing. I'm not saying that's a good thing. I'm just saying I don't get
No,
that close.
I I be trying to do that too. Like I gotta.
But we're gonna do that safely and disciplined when we do it.
Yeah,
Yeah.
I got
So, yeah. So it's just a matter
you.
of I don't know what that count amount is and how much you feel like you can trade. If you feel like you can do that in a disciplined and safe manner, and maybe you got because again, when we trade, when we scout, remember when we're scalping, we're on the 30 seconds. So you got a whole bunch of setups that's gonna come on the 30 seconds. So if you have the time to scalp and make that, and maybe that is a part of your trading plan for the day. My trading plan for the day is I'm going to take this day for the next 6 hours and I'm going to scalp. $200 is my number every time, and I'm going to scalp $200 every time I see a setup. I'm going to scalp it on the 30 second, and I'm going to take that 200 and run every time until I pass this account. Maybe I'm going to do that 20 times, whatever the numbers are. That's what I'm trying to say is you guys you don't have to have a formal trading plan that you wrote down. It's nice because it reinforces it, but you need to have a plan in mind, not just I'm gonna get on in front of the charts and see what they give me today. Is that how you go into a business? You got a whole business plan. Come on, this is your business. You have to take it seriously if you want the markets to take you seriously. So you have to have a plan about it. How am I going to go into the markets? What is my goal for today? That's why I always talk about, even like when I talk about my number, when I say my number is $1,000, I don't mean that you guys have to have the same number. That is my lowest number that I will take. If I see that the market is continuing up, I'll stay in. But again, I tell you guys that I trade very conservatively when I trade with you guys because I don't want people to misconstrue something I'm doing, right? So I make sure that I trade conservatively. So for me, while I'm doing it with you guys, I'll take that $1,000, especially if I see see it dropping. I'll take that $1,000 because that is my bottom line number. Like if I don't make nothing else, if I make $1,000 a day, I'm good. But you guys have to figure out a number for yourselves. Now, it's great that you guys are, going with my number because you're trading with me. But at the end of the day, you guys have to figure out a number that maybe $1,000 is too scary for you. Because you got to be able to do this on your own. So maybe 500 is the number. You have to figure out a plan that works for because that's the only way you're going to be successful. Because other than that, you're only going to be successful when you're on trading with me. Go ahead, Jay.
I don't know if you might have to hit me in Telegram or on a
Okay.
side note. I know you have parameters right now that you're doing with the 30-day challenge. So you're basically safeguarding your trading. Your trading. I know that you're safeguarding it. But I want to see me personally. I would like to see Donnice trade. Like
That
What
risk.
Jay say, I'm aggressive.
hey, hey, you know what I mean? I want to see that. So if you guys hit me up on a side note or something like that, I want to see that animal. I don't want. I understand we in here riding with seatbelts, but nah, I need
Right.
to
I
see that.
gotta make y'all keep on the seat belts right now. I can't be,
Hey, I already
I
know
can't
the
be getting,
seatbelt part.
hey.
I'm trying to hit that buck 80 around the corner, and we drifting around that corner. I'm trying to
Man.
see that.
Okay, because man, that 80 is my normal
So
speed. That's like people be like, you speeding? No, this is the normal. This is the normal. This is it. This is the normal. I'm going slow if I'm going
I'm,
65. So yeah.
I'm trying to see that 3 day, Donnie. So if you got to hit
Okay.
me up off the side note,
Yeah, me too.
Oh man,
why
Me
you
shoot.
too.
laughing at me, Miss Booker?
Hey, I'm with you. She already know. It's like a couple dollars. Who got to make that? Like, oh. So I
No, my
definitely
last group I
understand.
passed in the day. My last group of
Yeah,
challenges I
see, I
passed in the
like that
day.
day stuff too.
I have a
Yeah.
Yeah.
question
Yes.
Yeah,
or a comment.
like I told you before, man. Like it don't matter what happens during after this 30 day. Like I'm down. I'm with you. Hey train. Hey,
Right.
I'm here. But right now these training wheels ain't doing.
Yeah, yeah.
We're gonna take the training wheels
I got
off at week 2. After week 2, we're gonna take the training wheels. We can't just, we gotta keep
yes,
everybody.
ma'am.
We gotta come on now.
Yes,
Come
Okay.
on.
ma'am.
All right.
All right.
Yes,
I'm
Janet.
sorry.
How
I
can I help
apologize.
you?
I go in the background.
All right.
Okay, so basically, I was listening that you say you passed yours in 3 days. That's on your first level. Then when you get into your PA, that's my understanding is they're going to be looking at consistency. So if you're saying that you're passing it in 3 days, when you go in your PA, you're using the same strategy. And then
Okay.
because you have to do, you have to trade for at least 10 days, or I think seven to 10 days. And then once you go in and start, making those trades, are you changing, the way you're trading, tempering it down so it looks like it's
Mhm.
consistent, or
No.
that's kind of what I'm trying to.
Okay,
'Cause-
so I'm gonna explain the broker that the challenge that I go through, which is Apex. So what they do have a 30% consistency rule is what you're speaking on. And their consistency rule is states that they're looking not just at your profitability, they're looking at your trades. Are you going in and you using the same lot size or contract size? Are you because they already know, like for instance, the market does what the market does. They can't say that, oh, you got to stop your profit when you make $1,000 or when you make 10,000. That doesn't make sense. So if the market, they want to look at consistency of your trading. They want to know, does it look like this person traded with a trading plan or did they just get lucky? That's what they're looking for. And if you read in detail, and also if you listen to the videos, they're saying that. I have a trading plan. I have a written one and a visual one. So I have a trading plan. That's one of the things that some people have been required to provide. Do you have a trading plan? I have a whole trading plan because I cold hold indicators. So I have a trading plan. I coded the indicators. So there's no way that they could tell me that you don't have a trading plan. I use my the indicators I coded. You know what I'm saying? And they have all my strategies there. So that's what they're looking for. Yes, there is a 30% consistency rule, but they will also tell you that, when you get a big win, like one of the reason I was able to pass one of my trades in a day was because I was able to capitalize on news trading, which you can do with them as long as it's within your normal thing. Well, they're going to look at it and see, does she trade around 6:30 every morning? Does she trade, around this time, or did she just do this to get this money and pull it out? That's what they're looking for. So for me, I trade the same times every day. Every day. When I talk about the $1,000 a day, that is my minimum. So when I talk about it, like with you guys, and I think I could pull up my orders, because I'm very transparent, so I'm not tripping on none of that, just so you guys know. So I think it's this one is the one for my orders. Yeah. Is it? I know it's another one that kind of shows you more. Those are just the orders. Okay, so that's not the one I want. It's another one. It is, I think it's the log. Let me see, maybe trade performance. All right, yeah, so let's look at my trade performance. And it's looking at whatever account I'm clicked on right now. This is the account it's looked at. So basically it's showing you right here, they have everything at their standard. So they're looking at, so of all my trades, my gross P&L was 2,100. The number of trades that I did was 3. The contract size is 80. The average trade time is, about 2 minutes. My longest trade was 3 minutes. So they're looking at consistency. She's doing the same thing every time. How many profitable trades have I had? 100%. What is the expectancy? They expect that I'm going to usually make my average winning trade is about $700. That's what they're looking at. They're looking at that. They're looking at the consistency of it. And if you go down to my trades, it's not like I had some big windfall of trades. I made 600, I was in there for a minute, 45 seconds, I made 1,100. 3 minutes, I made 350 because I probably had to come back from something. But they're looking at it that she's doing the same thing. She's not doing anything outside her normal. And her lot sizes, okay, she did 20 here, 10, 10. They're consistent. I'm consistent with what I'm doing. It's not like I'm doing some windfall amount, some windfall thing. If you were to look at that account, that's what they're looking at. So when they say consistency, that's what they're looking for. Does that help a little bit?
Yes, it does. Thank
So
you so much.
I don't
Yeah.
believe that it's meant for you to stop your trading or to limit the amount of money that you're looking at, because remember, you earn the first 25,000, but after that, they're making 10% off of all of your money. What they want to make sure of is that they don't put you because you go into the live market. They're gonna take all of that analysis. That's why they have it there. They're gonna take all of that analysis and look and say, okay, this person is 100% profitable. She's been 100% profitable for 2 months. oh, she's gonna be a moneymaker for us. Let's put her in the live market. Because remember, when I'm not in the live market, they're paying me. If they consistently see that I'm 100% profitable, they're willing to risk because they're putting their money up in the live market for us. So they're willing to put the money up because I'm 100% profitable, or I'm 90% profitable. So you want to pay attention to your performance, because they are. That's what they're looking for. Now, I'm gonna see if let me see. I don't know. I guess shoot, let me see. Oh, those are the new ones I just passed. It's not gonna be anything on that one. So that was from the last session that I must have made $2,000, but there was another session that I had made. Let me go trade performance of the previous session where I had made a big windfall. Go to the previous section. Let's see. Oh, they don't. Performance. I want performance not from today, from last week. Let me see. Can I? Oh, I had to pick an account. Shoot, I don't know these numbers. I'm gonna put the same account. PAP, PAA, PEX. I'm new at this too, you guys. So there we go. 3-3. Let's go 3-3. All right, and then we're gonna see if it's gonna. Okay, so look at this performance. So look at there was one trade. So let's talk about this one. So my gross P&L from last week was $10,000, right? I had 7 trades, total contracts 320. My largest winning trade was $37.50, but on average, I'm making about $1,500. That is only double. My largest trade is only double, but my standard trades is probably about $1,000 a trade. Isn't that what I say? If that goes along with my trading plan that says my minimum is $1,000, right? I have 100% profitable trades. My maximum drawdown that I went into was $88.50. That's what they're looking at. They're looking at, okay, what time of the day does she trade? She mostly trades at 8 o'clock and between 5 and 6. They're looking at that. That's what they're looking at. They're looking at my trades. My trades are not all willy-nilly. They're all about the same amount. They can see, oh, she's not trading. Oh, she made more money on gold, right? Those are those big winners was gold. Okay, well, I can see why her trade, the money she made on these are different than these, because they're different assets. This is S&P and this is gold. So she made more money. Okay, so she makes more money when she trades gold. They're looking at all of that, but her contract size they're all about the same, 25 and 20. They're all about the same. So that's what they're looking at. All of her trades are short trades. She don't do long trades. That's what they're looking for. Is that consistent? Yes, that's consistent. So she must have a trading plan. Okay. So I just wanted to show you guys that's what they're looking at, more so than, yeah, you're not supposed to switch up and say, oh, I'm not going to do good because they're not going to want to pay me. No, you just prove to them like, no, we have a trading plan. Here's my trading plan. This is how I trade. Because they allow you to trade news. They allow you to, they don't allow you to copy trade and all of that stuff. You have to be trading your own account. You can copy trade your own accounts, like how we group them. You could do that. But yeah, no. Like you couldn't copy trade from me like a service. Like I had a service where I was trading them and it just automatically copied your trades to your account. You can't do that with them. They don't allow that. So, but other than that, no, you're good to go. Any more questions? Because I'm gonna go ahead and start teaching a little bit on the indicator. I know a lot of people, you guys have been with me for about a week, and it's really simple. So you guys got a good feel for it. But Anything else that you guys have a question on before I go into the market?
No, ma'am.
All right. All right. I hope I'm recording, because I don't even know, to be
You
honest
are,
with
you're
you.
recording.
Okay. All right. I'm like, I hope I'm recording, because I just thought about it right now. Like, oh my gosh, I hope I'm recording. I ain't been thinking about recording. All right. So I think in one of my videos, I took you guys through how I kind of look at the charts and do an analysis of the charts. But I just want to tell you guys, I do a full analysis of the charts. Even though I'm in scalp mode, I do still do an analysis of the charts. And I'm going to just, kind of start from just the monthly and just let you know, you guys all understand that we are all, every account is in a bullish market. From a long-term stand, you are in a bullish market. Like, that's the whole point. That's why a lot of stock people don't short the market, because we're in a bullish market. It's meant to go up. It's just how it is, right? So if you see the monthly, it's bullish. No matter what chart you're on, it's going to be bullish, period. So we know that. So we always have to figure the reason fibs work so well is because we're always figuring out the retracement, because we're always, we know for a fact we're in a bullish market, period. But we're trying to figure out at what wave we're on what time frame, and what retracement, it could be what leg of the Elliott wave, or what, retracement level we're at. You're always, and that's why the fib tool, I think, works so well, is because we're always figuring out a retracement, and that's what the fib tool does. It lets you know the retracement. So that's that. So for that reason, you don't have to, you know that you're in a bullish move. So if you're selling, you automatically know that you're counter trend trading, so to speak, right? So I can go to the weekly, it's kind of the same thing. You get down to the daily, which is why most people start at the daily, because the weekly and the monthly, we already know we're in a bullish trend, right? So what you're trying to figure out is where on that daily trend we are in the form of a retracement. So if I, scoot all the way in, this is the daily, but you can see it, if you look at it, it's still bullish, right? So what we're trying to figure out is this last leg here, where are we at in that? Where are we at? Because this was the last time it went down and made a double, kind of almost a double bottom here. And then it rejected off of that, and now it's coming back. So that's what we're trying to figure out. But unless this market, let me just show you guys why I say what I say. Where's my tool at? I always forget where it's at, right here. So unless this market comes all the way down here, because that's where it would have to come to be a bearish market. So unless this comes all the way down here, it's still a bullish market, because remember, it can come down to here, go back, right? It could do all of that and still be a bullish market, right? So it would have, that's what I'm trying to get you guys to see. It would have to come all the way back down here. And that's what I mean when I say we're always in a bullish market, right? Okay. So now that we got that figured out, we know that's why people start at the daily. But even at the daily, as you can see, it's still not a lot of information. So, but what I like to tell people to look at is, look at the last candle of you want to look at the current candle of the daily, how much time you got left on it, and what the current candle and the previous candle, because that's going to tell you a whole lot. So basically what this is telling me, if I look at this, is I got a big institution candle, right? Because that took a lot of money to push that down, or something happened in the market. And then right from there, if you look at this, let me show you something. And this is something you guys really want to start focusing on, paying attention to. you see this, when we learn candle basics, we know this is open, high, low, close, right? So the next place this should be is open right here, right? Shouldn't this candle open right here? That's where it should open, but it didn't. So that's called a gap. We know that's a gap. So there's a gap. So for me, this level is critical. This level is critical because it came down with this big candle, all of this institution, and jumped up from there. So that's why you want to pay attention to those last two candles and jumped up, and you want to know why. You might want to even put your little eclipse on there and just know that this is a significant level for some reason, right? So just a reminder that you had a gap there. We all know whenever there's a gap, they generally come back to close the gap, because what is a gap? Unfilled orders. We don't know when, but we know they come back to fill the gap, right? So that's why I said that area is significant. So that's the data that I got from the daily so far. That's all I really need, right? Another thing I want to point out is this on the daily. I'm sorry. Do you see a potential, like, does it look like a potential head and shoulders? You might want to pay attention to stuff like that. And let me show you something that I just seen and I didn't see before, but by putting that line there, do you see that there was a gap here? There was a gap here. Is it a possibility that this came back to hit this gap and shoot back up? Because what I say, whenever there's a gap, they come back to fill it. We don't know when. They went all the way up, and this could be the fact that they were coming back to fill this gap. And now it's going to take off from there. So that's why you want to pay attention. Stuff that happens on this level is not as easily to be manipulated. But look at these big candles that brought them back down. It's total institution on the daily, total institution candles. Either that or a significant something happened, COVID or something like that. And, so you want to pay attention to that. You want to see that. You want to see that when this last gap happened, it was a huge shoot down, but rejection, and came back up really quickly in the same day. Shot down and came right back up in the same day. Right? So you want to pay attention to that. This is a what I would call a manipulation zone. If I was trading this in the past, I would have been paying attention to this and knowing that they're probably going to kick up off of that. So that's that. That's the daily. So now the next place I go to is the 4 hour. And I find now I'm looking more at the current structure. I'm not so much looking back. I'm looking at current structure, trying to figure out, do I have any double tops, double bottoms? That's what I look for first. Aha. This is the last double top, double bottom, right in the significant zone. Look at this little candle right here. You got what I tell you about the one candle resistance. This one blue candle caused all this halt in selling pressure. So this area is a major area of importance. So I'm going to go there and I'm going to put my little rectangle in there, right? And I see that this rectangle denotes double top, double bottom for me, potential double top, double bottom. And we could see it with that box and went back up from there, right? So that's all I pretty much see on the bottom. On the 4 hour. I do, as a part of my double top, double bottom strategy, I teach a strategy where you can say, okay, well, once it comes to about, 50%, it validates it. So I know if it comes to this point, it's going to continue on to the end and complete the double bottom, right? So that's another thing, but I don't need that because I'm scalping right now, right? But these are all things that I keep in mind as I'm going through. So this is 4 hour DB validation. All right. And I do that in blue because it would be buying, right? So that's that. right? I'm down to the 4 hour. I look at my 1 hour. Now I'm looking more right in here, looking at this last swing high, swing low to see, is there anything of significance that I need to pay attention to on this? And again, I could use my Quantum FX Pro because it does it all for me, or I can do it manually like I'm doing now, right? So this is what, this is the zone where we're in the 1 hour. We kind of see that it's respecting. If I was to put a trend line, it's kind of respecting this trend line coming from here. I can also put on my Quantum FX Pro and it'll take it from the top of the trend line. So right now, current price is respecting this trend line here, right? But it's also respecting this selling trend line. So it's kind of going back and forth, as you can see, respecting these two trend lines, this blue and this red trend line, right? I could draw those trend lines, or I could just use the Quantum FX Pro. Same thing, right? So that's what's happening there. So I'm like, okay, this is not really giving me anything to scalp, right? But if I was looking for a position trade, right, I would know that there's a potential, the next place where there's a potential double top or double bottom would be here. So more than likely, if I can do, depending on what time frame, I mean, I want to go in on the 1 hour, I can do this last kind of low to high, which is about here. Yeah. And I can say, okay, it broke through the 23, validating that it's doing a retracement. It went back, retested the 11.4, and now it's coming back through the 23.6. So from there, it'll probably go to the 38, then the 50, 60, and what, isn't that amazing? My 50, 61, 8 zone ends right at the area of my 4 hour DB validation. Confluence. It's confluence. It's not a, oh my gosh, it's confluence. So letting you know that that's like, okay, I got two different tools that I'm using on 2 different time frames. More than likely, price is probably going to go up to there. Just maybe, right? So I have a possible zone if I was to look at and say, okay, if this candle breaks above here, right, then more than likely I can put in a longer term position trade, and that's what I call position trades, that's going to take me to here. But now that trade is going to go up and down. So this is not an apex trade where I have a trailing balance. This is a trade in an account where it can take the ups and downs of normal trading, right? Because I'm not going to watch this trade. But I may use my trade manager to manage the trade, moving my stop loss into profit, adding stack or adding additional positions at different points, et cetera, et cetera. That's the purpose of the trade manager. That is the two tools used together. So I found a position trade, and now I based on my trading plan, move stop to break even when it hits this much. When it hits this much, move it up a little bit more, and then trail it by 5 points along the way and add stacks at every 30 points, whatever it is. That's a part of your trading plan for the trade manager, and the trade manager does it for you. So you can hands off, go be with your family, friends, loved ones, and do what you do, or your purpose, whatever that may be. That's what I'm saying when I say I see there's a potential of a position trade. So for me, if I was looking to get into a position trade, I would just simply put an alert on this 23.6 line and say, alert me, because I'm not going to sit here and watch it. Alert me when price closes above this. And we all know how to do alerts, right? You just simply go to alert, say, I'm sorry, if you do the alert on the actual, you should be able to do an alert on the act. Oh yeah, I know what I'm doing wrong. Do an alert on the, they don't allow you to do alerts on the indicators. Oh wow.
I
Okay.
normally just put a
A
line
line,
there,
and it lets you do
and
the alert on the
yeah,
line. Okay.
it
So
lets you
there
do
you
the alert
go.
on the line.
So that's how you would do it. Thank you, Jay. So you put an alert on the line, bam. Because And then you would just say, you know, alert me when this goal closes above it. And there you go. You don't have to watch it. Your position is ready. You can already have planned in your mind how you want to use the trade manager to work with it, blah, blah, blah. You're done. That's it. So now we're going to keep going down because we're worried about scalping right now. So we know that even in our scalping, we know that because it has the potential to go up, we want to scalp more, you know, we can scalp more aggressively on buys and more cautiously on sales, right? Because we know the direction. That's why I say I still do analysis, even though I'm scalping, right? So we're going to go down to the 15-minute because I told you the 15-minute is the lowest analysis that I will use, period. For even scalping is the 15-minute. Now I may look at the 5, the 1 minute, the 30-second for entry, but as far as analysis is concerned, the lowest I'm gonna look at is the 15. One of the things that I mentioned about the 15 is the fact that you see looking to the left, you have this clear pathway. But now that was prior. Now you have this potential double top right here, right? So for me, I'm going to mark this out so that I know that as I'm coming up, right? Because I believe it's going to come up. As I'm coming up, this is an area that I need to pay attention to. And I'm going to put the time frame so I know, right? And I have color for my boxes and all that. So that's why I know what it is. So I know that at the 15-minute, this is a potential double top, double bottom because of this. But if I put double tops, double bottoms on, it'll that area, or if I go to a low enough time frame, that area is going to come out anyway. You'll see in my support and resistance just on the Quantum FX Pro. Boom. I'm going to take these off. So, oops, take these off so you see what I mean. The same area I marked is already marked. I don't have to draw these boxes. That's the point of it. It's already warning me that this is an area. So as I'm scalping up, I already know that this is an area. I go to the 1 minute, I can almost guarantee you it's there as well. There you go. I already know. Yes, Jay.
Quick question for you. Would you take account of that? Would you be looking at that if you look to your left, how the market has broken that level right there?
This
Is that
level,
something else? Is that something that you'll look at too? No,
you talking
your
about this,
demand level, that your
huh?
low. It broke that low to your left, right there, that low.
Here? No,
No, that
and
low
I'm
that's right.
this one or this one?
I can't see. Hold up. Red, that one right there.
This one?
And
No,
yeah, and that is a possibility that it could be coming back down to that area down there, or no? That's not a
no.
possibility.
I'm not saying it's not a
Okay.
possibility because the market tells me what it's going to do.
Yes, ma'am. All right.
This is what I'm saying. So you remember what I said is I'm on the 1 minute right now. It's very easy to, so it looks, when you're on the 1 minute, it looks like it's something. It looks like it's a big deal because it's on the 1 minute. But remember, the 1 minute can be manipulated so easily by the banks because they don't have to move that much. They don't have to risk that much money to manipulate the 1 minute. Because if you think they care about, say, I'm just going to say $1 million, but we know it's more than that. Do you think they care about $1 million that they put in fake orders, or I'll say in orders with no opposing, no seller? Like if they put in $1 million worth of sales to themselves for a minute on the minute chart, it's going to take them maybe 20 minutes to get that $1 million back after they wipe out all of the retail buyers that was in a buy when they push that sell down. It's only going to take them 20 minutes, 20, 30 minutes. Let's say I'm going to give them a whole hour. It's going to take them an hour to bring market right back to where it was originally after they then took out all of y'all sell stops because y'all was in buys. So it's going to take an hour to do that. You think they care about money being in the system for an hour that they about to recoup right back in an hour? They don't. Because they're going to get it right back in an hour. So they're going to put in those orders for that hour, wipe everybody out that was in buys, and now it's hit their stop losses. because they pushed it down to a sell, which is what this is. Let me show you what I'm saying. This is what I'm saying. Price went all the way down here. We know that this is a significant level because it's on the daily. It's on the daily. So this is a significant level because it's on the daily. This is. That's why I have it highlighted. You see the box don't even encompass this. My circle don't even encompass this as a part of it. So you know that this is on the daily, this is significant. So when price started to come up, boom, it broke this previous high, broke this one. So now everybody's getting in. I'm putting my stuff in, I'm putting my trades in, I'm putting my trades in, boom. I'm putting my trades in right here, right? I'm putting my trades in, I'm going up, right? If you got in, say you got in this trade at this pullback here. Say you got in, oh, wrong one. Say you got in your trade and come on, stop playing with me. Say you got in your trade at this pullback, right? And your target was wherever. Where would you put your stop? Where would you put your stop loss? Let's just say, Jay, where would you put your stop loss? If you got in here and you see because it broke this previous high, and now it's on its way back up. Where would you put your stop loss at? And I want you to see this.
All right. I got
Would you put your
I
stop
got
loss?
bad connection, but
Okay, so I'm gonna just say
I just came back in.
no problem. Let's just say you put your stop loss at the previous low, right? Because you got in, let's say you got in here, right? You got in here, right? So the previous low to that is here, right? Let's move this on over.
That's where I would put mine. I was just
Wow.
looking at that. I was just looking at that.
Isn't that amazing that they went right to where most people that was on this uptrend would put their low at and they wiped them out? You
Yeah.
think that's coincidence?
Yeah.
Do you really think that's coincidence? I need you guys to see on the 1 minute, if you guys are doing your analysis on the 1 minute, you guys are falling right into their trap. You're falling right into their trap. Do not do an analysis on the 1 minute. You take your entry on the 1 minute to get that sniper entry, but you base your judgment off of a 15-minute for a scalp, and a scalp, you shouldn't even be letting it go negative, so it don't matter. You take your $100, $50 and run if they start acting stupid. But if you're doing something, if you're in a position trade, your analysis should be, I say, 1 hour minimum. But go ahead, Jay.
My system just came back. I'm sorry.
It's okay.
So I see your arrow at the bottom, and you said you would enter. I saw something about entering somewhere else.
So what I was saying is this. What I was saying is this. This is how price moved. Let me just show you what I mean. So price was moving, just say it's coming down lower. It started kind of ranging, then boom, it broke. We know that this level right here that it broke is a significant level because it's on the daily as a significant level when we went back. So then price started up, boom, it violated this level right here. It made it's no longer making lower lows, it's made a higher low. So now, boom, now it made a higher high. How many points do we need to have a trend? I got a low here, then boom. This is my justification for an entry because it now broke. I got how many points? I got a low, a high, a higher low, a higher high, a higher low, a higher high. I got 1, 2, 3, 4, 5, 6 points. I'm good. So now I'm saying, okay, I'm gonna get in at the next pullback, right? And this high also broke these. So I'm in a good space. This is a reversal of the trend. It's going back up. All of the stuff that they teach us, right? So I'm going to get in at the next pullback. This is the next pullback, right? So I get in here.
Yes.
I get in. This the next pullback. I get in. I get in, and boom. I could say I waited to. Oh shoot. So you get in here. You can get in. Anywhere up in here. Like you waited to the blue, it crossed, whatever. But you got in, right? You got in somewhere after this pullback down, and it started to go back up, right? You got in.
That's why.
If you got in at this level, most people will say, if you got in at this pullback, most people are going to say, I'm going to put my stop at the last low, my stop loss, right? Where is the last
Okay.
low from this level? It's right here, right? It's right here. This is the last low. From this level, this is the
Okay.
last low. So what I was saying, so then price going up, you in the money, boom. You trying to get, you don't see nothing, you see all white over, all clear over here. So you're gonna keep, you're gonna go up as it lets you go up. You might have got out up there, but even people that got in here, they're gonna say, it's like, okay, it's continuing up, it's just a pullback. I'm still in profit. It just came back to retest this zone.
Okay.
It just came back to retest this zone. I'm gonna continue take that to the hills, right? Because I got in down here. I got in down here. So even when it retested, it went back up. Bam, right? Now we got 6 o'clock opening bell, and we got all of this movement down. We got all, first of all, we was going down. We got 6 o'clock bell and moved everybody up. Then boom, it came back down. But what I want you to understand is when it came back down, for all of these people that was in buys, if they stayed in it, because this is the 1 minute. So this ain't been that long. It's the 1 minute. So all these people that went up, it just wiped all of these people out because most people would have got in here, right? If you're in a position trade, you got in here and you probably put your stop down here. Do you think it's a coincidence that when they pushed it down, and you know that it was institutions that pushed it down, because look, it's going right back to market, right back to market. So when they pushed this down, why is it that they went right down to where people's stop losses would be? So when you
Um.
ask me, is this significant? I tell you no, because this was just a part of the manipulation. This was the,
I
let me show
completely.
you. This was part of the manipulation to get people to say, to be justified that, oh, it just came back to retest this area where it broke out of, because that's what they teach us. And it's going to keep going up. So they get all them people happy that it's going to keep going up, knowing all along that they're going to come and do a sweep and get all of these people's money, hit their stop loss, and then go back up. It's not significant because it's not on a significant time zone. If I go to the 4-hour, let me mark this first. Let me show you what I mean. If I mark this, I can guarantee you it's not a significant area on any higher time frame. It's only significant because it's on the 1 minute. So let's go to the 4-hour.
And I understand.
Look at it. What is that? That's the, oh no, that's not. Where's the, yeah, that is it.
You.
Yeah.
It's that small area. Yeah.
It's not significant on the 4-hour. You get what I'm trying to say? So
Yeah.
it's
I
not
get.
even significant. So if you was looking at this as a part of your analysis on the 4-hour, would you say I'm intimidated by this candle? It may give you caution. You might put a hedge in, you might, but it doesn't do anything to stop me from continuing in a buy. If I'm I'm taking this as a buy, it doesn't do anything other than tell me that, okay, they had a little indecision, especially because I know it's during, it's, when did this happen? 2 o'clock. I don't even know what time zone. Okay. Yeah, at 2 o'clock in the morning. Oh, that's 4 hour, 2 to 6. So that's 6 o'clock, especially as, knowing that it happened right with the 6 o'clock opening bell. Doesn't do that. Does that help you to see? I'm just trying to, because I got 15 more minutes.
Yeah. Yeah. I know you got, like, if you go down to that lower 1 minute real quick.
Uh-huh.
Um. Like, I understand what Janet says she would put her stop loss at, but I wouldn't have put my stop loss.
Where would
I
you
would have
have
put
put
my
your stop?
stop loss there. I would have
Where?
put my stop loss right where I went in the trade, that low where I went in the trade at, that low right there. I would
Which
wait
low?
until
This
it,
is,
it went past. Yeah, so if you went in a trade and you start to see, I would wait till it break that high that's up there, that small high. Once structure broke that high and gave me, I would have got in there, and then I would have
You would
looked
have
to
got
the
in
left.
where? You would have got in here? No,
No, I got in up just a little bit
right
up
here,
further. No, just down some. You see, if you're going off of it, it goes down and then it comes up and then it breaks that small. It breaks that
right
because
here.
all right, so
Okay,
you at
you
that
broke
top,
this right here, right here.
come down just a little bit lower. When you first get that break, when you first get over to your left, over to your left, go straight across, straight.
Ah, shoot.
You can't annotate. So you
It's
at that
okay.
high. You see where you got your arrow at? You got that arrow at the high. The
Right.
the arrow, that arrow there. If you come down, that next high, you got that area there. When it passed that area there, once I got to pass there, I would end up putting my stop loss down at that bottom where you got your entry at.
But first, where's your, this is your stop loss?
That's where my stop loss would have been at. And then I would have looked over to the left to see once it broke that structure over
Where
here,
is your entry? Where's your entry?
my entry would have been in once I passed that small
This one?
that inner no up top.
Up?
Well, I can't annotate. I'm sorry.
It's okay. I'm just trying to, because what I'm trying to see is what
All right,
I'm
so
trying to,
there
okay.
you're at.
So
So
this
you're
is
at
where
that.
it, so this is what I'm trying to say. So this is, so it finally broke. You see these big candles. It finally broke through
Yeah.
this previous over here, right? That's where those big candles came in, right? But when you break through, you don't get in the breakthrough, you wait for a retest. So it could possibly get in here, right?
Mhm.
You could possibly have gotten in here. But for me,
Mhm.
my next thing is, so some people get in here or I would have seen them get in there. You're going to get in at a pullback after it pullbacks and
Mhm.
verifies that it's going back up. So it broke here, right? But one of the things
Mhm.
that you see is when it broke through, and if I had the MACD on, I can almost guarantee you that it wasn't done with the pullback. When
I
it
got you.
it it, it wasn't, it broke through here. The reason why I say that is, let me try to show you why with my cloud.
All right.
So
I understand
when
where you come from. I'm just saying
it
if
need
I'm
to
on that
cross,
level, if
in
I'm
order
on
for in
I'm
order for me to make a decision to go back in after this break, it has to cross back down my price first. It never crosses the price till here, and then it comes back here and crosses the price and comes back up. That's for me why, because that's how I know once it crosses the price line, I know that the pullback is over. So it crossed my price line, and now I know, okay, it's going back up. It crossed back into blue right about here. So this is where, like, if I was looking in detail, where I would have had an entry after it crossed back in blue, right? And I would have went from there. So if you're saying from there and then this being your stop loss, I could see that, but I can't see coming in over here. But I understand where you're saying this is, it broke here, and around here you would be your entry, right? Or no?
I just came back. My internet is horrible.
Oh, it's so
I'm
horrible.
sorry.
Okay,
Yeah.
well, we could do it on a
My
side note,
internet
but
is horrible.
what I want you to see is you got to know why you got in. And so you're saying you got in because it broke a previous structure, right? But it wasn't finished retesting. You had no, what was your proof that it was done retesting? What do you use as your proof that the correction, a lot of people call it the correction is over? What are you using for that? Because even if I put EMAs on this, I can tell you that the EMAs, it would have came up, crossed back, and it wouldn't be time to get into somewhere up here, possibly even after this high, right? So this is where the next place I can see if I'm looking at even using the EMA is possibly here, right? And if I got in here, I would make this my stop loss, right? I got in up here, it came back, tested it, and continued stop. I need to lock that and continued. So it came back, retested. What did I say? Where was I at? Okay, here, came back, retested it, and continued up. Maybe that's your exit. But remember, this is a 1 minute. Your analysis wouldn't, most people's analysis are not going to be on the 1 minute unless they're scalping. Banks are not trying to get scalpers, which is why I scalp. Banks are not looking at scalpers because they're in and out too quick. They're looking at position traders that have a stop loss and are holding their positions. So that's the manipulation is meant for people that are putting in position and have a stop loss, ain't paying attention to the charts. They're putting a stop loss in and are, you know, using the things that were taught to do that. You get what I'm saying? Like, it's the thing, it's not the scalpers. It's not people looking at the 1 minute. Because this 1 minute is not true analysis. It's not enough data. I mean, it's a lot of data in it, but it's a lot of noise. It's all noise. It doesn't mean anything. So they're looking at people, if you go by the 4 hour or the 1 hour, and you're looking at people that say, this is the, you know, let's look at the analysis based off of the 4 hour and say, okay, most people see, here's your break, you know, here's your break of structure right here. Let's see. So you came down, boom, you broke this high here, you know, went here, you broke this high here, right? So you broke, this is where, I'm sorry, you know, this candle right here broke, right? But, you know, it broke, then it retested, and now I'm gonna get in to go up, right? So if I get in to go up there, oh, wrong one. If I get in, I get in after this candle broke here, and I'm looking at going at least to, you know, most people go here, they might even go to here, right? My stop loss is either going to be below here or below here, right? If say you're a position trader, you're going on the, well, unless you got out right here, right? Unless you got out here. So people, you going up and you going up, right? You going up and you up. As position traders, as long as it's going up, they're not getting out. So again, they're looking at, so if I'm in the position trade and it went up to here, okay, even with the way I trade, I would say, okay, well, it didn't break below this, so it's not a significant loss at this point. It wouldn't be into here where it made a lower, it's making lower lows and lower highs to possibly here that I would say, okay, this is a significant amount of loss, right? To get in and get out of. But this is somebody this is coming back from way August 9th. But we're looking at the people today that they tricked, right? So if you look at today on the 4 hour, you can see what I'm saying when I say that nobody that this candle is a total manipulation candle. Total banks manipulating. Price wasn't doing anything. Price was stuck it was in a range. Price was not doing anything. Price was ranging. And then boom, it broke out of this range, right? So even if I broke out and I got sellers breaking out, boom, I'm gathering sellers. Now, boom, I'm moving it right back up. I want you guys to see the manipulation of the candles. That's really what I'm trying to get you guys to see is when you trade, unless you're on a higher time frame to do your analysis, not your entry, two different things. A higher time frame is going to help you to see clearly because it's harder for them to manipulate on it. If you go even higher to like the daily, right? This tells you, oh, they've been going down for the longest. But soon as it hit this previous zone over here, they shot up. So if we were analyzing yesterday, we would already know, like, oh, we know this area is an area to watch out for. So when they did this, right, we knew that it was going to shoot up. You just know because it hit this zone. So even if I was selling with this big candle, I already know I'm going to start taking my positions out around here. because it's a big area where there was a gap and all of that. So I'm just saying, when you do your analysis, so yesterday, if I was scalping, I would be selling, right? Today that I see that they hit this zone, I'm buying scalps. You see the difference? That's what the purpose of the higher time frame. But I'm also, position when, so you got to change your mindset to coincide with what you're doing at that time. You can't have the same mindset when you look at the charts and think that it's going to give you all the different techniques and strategies, because it's not. You have to base the strategy that you look at on what type of trading you're doing. So if I'm scalping, I'm going to look at this daily pattern differently than if I'm position trading, because it's going to tell me two different things. For a position trader, it's going to tell them one thing, and for a scalper, it's going to tell them another thing. So as a scalper, it's telling me you want to be majority in buys. So when you see it drop, get in for a buy. That's what you're looking for, because right now, according to the daily, it is buying, and it hit a zone. It hit a zone that had a gap. So it probably went back to fill them orders in that gap, and now it's going back to market. So when you say, would I look at that zone? No, because I know that this is telling me the real picture. The daily is. So I don't care about the fact that on the 1 minute, I saw this zone here, because I know this is not the real picture. This is the daily picture, is the real picture. This is not the real picture. Did that help a little better?
Yeah, I get you. I was just saying it. Would you look at that? I got you.
Yeah, so I wouldn't, no, because it's the 1 minute. Remember, you can answer that question really easy. Anything under the 15 minute, I ain't looking at. So if it ain't on the 15 minute, that's the lowest I'm gonna look at it. Yeah, no, and look, perfect. Look at on the 15 minute, it didn't even beat this low. See what I'm saying? It's not even beating this low on the 15 minute. So this is still this. Let me take this off. That was perfect. So boom, 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 boom. It beat this one, but then so it violated. Oh, let me do this over. I'm gonna do it over. I'm gonna start like this. I'm gonna do it. So, and then boom. So let's look at this. So you got all highs and lows. Then you got 1, 2, 3, 4 points, right? So you thinking, oh, it got 3, 4 points. When do you get in after your 4 points? You get in on the pullback after it's made the 4 points. But look what happened with the pullback. This is what happened with that pullback where you would enter. Oh, it didn't do nothing now. You see what I'm saying?
Yeah, I see.
That's why I
saying.
look at. That's why I look at
when I'm
significant ones. But go ahead.
yeah, because the reason I asked that question, because I mean this is something that I got to get out of doing. If the way you did that, I'm seeing a 1, 2, that's a 3, and then that ABC, that 1, 2, 3 where it broke that low, that's like an ABC, and then that one straight to go up, that's a 4, which will make this overall movement a 1. And then as it goes down and breaks that low, it looks like it's about to start to beginning of a bigger correction. That's just how my mind look at it. And I guess I gotta get out of looking at it like that, because I'm
No, you
thinking that
don't. No, you
it might
don't.
not pass that level and then
You
end up
don't have
coming
to
back.
you don't have to get out of, because you're doing Elliott waves. For those who don't know, you don't have to get out of doing that, but you gotta you see what they not try to tell us. What they tell us is that we could do Elliott waves on any level, and it's going to be the same, because waves kind of conjugate and they make up bigger waves on bigger level time frames. They do, but the significance of the wave makes a difference. Is what I'm so yes, the 1, 2, 3, 4, 5 on the 5 minute could be a 1 on the hour, right? So because of that, you got to transfer that knowledge along with it. So if I'm doing this 1, 2, 3, 4, 5, I see the ABC, the 1, 2, 3, 4, and I'm being funny about it. But if I see all of these patterns on the 15-minute, right?
Right.
You gotta make it make sense. The 15-minute, I need to go see what I see on the 4-hour before I throw the whole bank in on the 15-minute. So it's not that you I'm not telling you to get rid of your teachings. No, don't do that. You utilize them to help it, but you got to make the part that they should have emphasized in the Elliott waves is, yes, you can do it on the 15-minute, but don't take it that seriously. Go and see what's happening on the 4-hour above, because that 15-minute could be manipulation. Go and see the 4-hour above and see what's happening there. Do what you see on the 4-hour and the 15-minute. Does it consolidate? Does it make sense together? Because to me, even if you saw the pattern that you saw, when I go up to the 4-hour, it doesn't make sense anymore. You see what I'm saying? Them waves don't make any sense anymore. Because if you look at this down wave, what is that down wave showing you?
Okay.
What is that telling me? Does that even look like a wave pattern? No. So the reason I do it like that first, because I need people to understand that, is this or is this really just this? Or is this, and that's why, and I think when we first start talking, start meeting again, or is it this? Is because with Elliott waves, you don't know what pattern it is until the pattern's done. And I think I told you guys, I had started learning Elliott waves, but I stopped when I realized that to me, it's lagging. It's going to tell me that I've completed this pattern after I'm done. Well, that's not going to help me. I need to know what I'm happening right now while I'm trading, not afterwards. So that's the only reason did I dismiss all of that knowledge? No, I didn't. Because I understand that we're in waves. I get it. I totally get it. Now, where that would help me is once I seen a complete pattern and I'm after that ABC, I might be ready for that wave 1. But why, for me, it only makes sense. I'd rather wait for ABC wave 1 and 2 to happen, because I know the wave 3 is the longest wave of a wave pattern. I don't even want to get in the other ones, because wave 3 is usually double wave 1, at least. So that's how I use Elliott waves, just so you know. So for that, I don't get rid of the information. I use it to make sense for me. So if I want to do a position trade and I want to trade for that long, because I usually don't, then I would bring in my Elliott waves. But other than that, it doesn't make sense on the lower time frames for me, because I know that, it's like, think about it like this. When you at the beach, those little bitty waves that come in at the surface of the beach versus them big waves that's out in the ocean, which waves do you think can eat you up, can drown you faster?
The big one.
Them big, exactly. So the bigger time frame can mess your account up versus them little bitty waves in the front. That's the way you got to look at the analysis. All right, but I am past my time and I got to get ready for my nail appointment. But but this was fun, and I hope you guys got something out of it. I'm sorry, Robert, I didn't get to show you the
That's
indicator,
okay.
but okay.
I'm
But
gonna go back. I'm gonna go back to the archives here, and
yes, if
we
you
gonna
look
get
at
down.
the videos, and then I don't know which video it is, but Jay and then which video, what you said was you guys had mentioned when I came back, it was a really good video. I don't know which one it is, but it was one of the 6 p.m. videos.
All of them good videos. So
Yeah.
And my apologies for holding y'all up with those questions. My bad.
No, that's the point of it. These are advanced topics.
Right.
People
Stop. Don't even
Right.
do it.
yeah.
Don't even do it.
Yeah.
You good, Jay?
Don't even do that, Jay. Take over. You know what I'm saying?
Yeah.
Ask the questions. Just let you know, I'm gonna do the trading view video today. I'm gonna finish it today. There's a couple of things I want to just pick up on it. Then I'm
No
gonna send
problem.
it to you. Okay.
Thank
It's
you
like
so much.
a
You can
tip,
put it
like a
in the hub so everybody can get. That's what we're doing. Put it
okay.
in the
Now they
hub.
did ask me a question. Is there
Uh-huh.
any other videos that I should put in because beginners basically really don't know what questions to ask because they don't have the information?
So what I'm gonna do, I need to get with Donna and find out. I had vetted some people on YouTube where they give them, they're very basic, like literally how to do a click buy, click sell, click, because they don't know any of that. And
Yeah, I
so
mean,
I
I got those
forget what I
videos.
do. Oh, you do? If you got videos like that, I mean,
Yeah.
I don't see it being a problem. Just
Oh,
I would be, make them short video, make sure they're short videos
yeah,
that just give them like one topic, like this is how to do an entry. You know what I mean? Don't do a long video with all the, if they're short videos are best for newbies, because then they could just if it's a 3-minute video, they can just rewind them 3 minutes. You know what I'm saying?
got
It's
it.
not like rewinding an hour video. So the shorter the videos that get straight to the actual, because you could do this is how you enter a trade. Then you could do a video, this is how you exit a trade. Or you could, I don't know if you could combine them in one and make it still
Gotcha,
short.
gotcha.
But like that, this is how you do it on your phone, that type of thing. This is how you, I know sign up for TradingView. This is how you, do TradeOvate. I know Jay, and then thank you, Jay, for that. But yeah, I don't remember what it's like being a beginner, and then I don't learn like beginners do. So I don't know how to learn like a beginner. So I don't know what they need. That's why I always ask
Got you.
questions.
I got you covered. So
Thank you,
I'll
though.
I'll,
Thank
I'll
you,
put I'll
guys.
put it on at least two to 4 videos.
Thank you
Right?
so much.
You
Thank
have
you. And
that
just put
today.
them in the hub, and then not to me, just put them in the hub. Just put
All
them in the
right.
hub. All righty.
Gotcha. All right.
All right. So you
Okay.
guys have a great, blessed, prosperous day. I'll talk to you guys later.
Thank you, Denise.
See you guys tonight.
All right.
Bye-bye.
Okay. All right. Bye-bye.
Thank you.
You're welcome.
Bye.
End.